Right, so it has been roughly about 5 weeks now since we noticed this major upswing in the prices of crude oil all the way up to 65 and $64 as a result of the attacks that were carried out on the Saudi Aramco facility. And ever since then, we've had this sort of perpetuous downtrend all the way down to previous lows of $50. And I kind of saw this coming because at the time of the attack, there were a lot of news outlets that came out with wild claims about how crude oil was going back up to $80 or $90 even. But if you look at the actual impact that the attack had on global inventories or global supply, it wasn't all that significant because, Saudi at best contributes to about 12 or 15% of global crude oil supply. Yeah. And after the attack, they put out statements saying that no more than 50% of their national supply was affected by the attacks. And so that, if you look at the overall impact that the attacks had on global supply, it was not more than 5 or perhaps 6-7% at best. I definitely saw this coming, and so about 5 weeks back we had a brilliant opportunity to go short on crude oil all the way down from $64 to about 54, which was a $10 margin of profit over about 1, 2, 3, 4, 5, 6, 7, 8, roughly 8 days or so. Or you could have waited till we had some sort of a confirmation here with the crisscrossing of the long-term and short-term EMAs, and so that in that case you would kind of go short at about 57.5 or $58 approximately, perhaps a little higher, and you could have carried it all the way down to about $50, which is an $8 margin of profit over a time frame of about roughly 8 or 10 days, which was, all pretty good. We had some pretty good opportunities to go short on crude oil about 2 weeks back. All right, what we're going to look at next is the past 2 weeks and specifically the past week and see what's been going on there. To be very honest, guys, there's not a whole lot of price action that we've seen. Things have been pretty silent, but let's take a closer look at it nonetheless. Right, so if we look at the past 2.5 weeks roughly, right off the bat, we can see that there hasn't been a ton of price action. The price is pretty much kind of stagnated and paralleled between $50 down south and about 53 or $54.5 up north. There have been a ton of falls, breakouts, or at least kind of situations that looked like they had a lot of momentum, and we noticed the crisscrossing of the long-term and short-term EMAs, but they all kind of topped out at roughly $53 and came all the way back down to previous lows of 50, 50.5, $51. If we look at the inventory reports, however, it's not all that hard to say why that is, because if you look at the past roughly 5 weeks or so, it's quite evident that there's been a pretty significant oversupply. This past week alone, we had nearly 10 million barrels of excess crude oil in the US. The week before, we had nearly 3 million barrels. The week before, we had another 3 million barrels. And so the markets have been flooded with a ton of oversupply, and that has definitely contributed to keeping crude oil prices quite subjugated. If we look at the past month or so, it's quite evident that there's a lot of room for upward momentum that we could potentially see, compared to the prices we saw about 3 weeks back, or perhaps even, a couple of weeks back. There's at least another $2.5 worth of upward momentum that we could see in the prices of crude oil, and so what I'm keeping an eye out for is another opportunity to go long. In fact, I've kept my positions. You can see that I've got long positions at roughly 53.5, 54, and $55, and so essentially what I'm looking at is to kind of lock in profits at roughly 57.5 or $58 even. The catalyst or the factor that I think that could give us this upward momentum is a slight reduction in the inventories of crude oil. I mean, even if we have a slight reduction, it would cause the price most definitely to go up, because what we've seen over the past month or so is that despite having, despite having a pretty significant oversupply in the markets, prices have not dipped below $50, which has proven to be a very significant support level. We've had multiple instances where we've had, about 3 million barrels in oversupply, and 3 million the week before, and 10 million this week, but prices have still kind of stuck above $50, and so all we need is some, the smallest possible catalyst to push prices back up, and I think we could see a pretty significant uptrend by at least $2.5–3, and so that would make for a pretty resourceful opportunity to go long on crude oil, with a time horizon of locking in profits of anywhere between about 2 or 3 weeks at best. Yeah. All right, guys, I think that is going to do it for this video. Until next time, be sure to subscribe, and I look forward to seeing you all in another video. Have a good one. Bye now.